market infrastructure. Again, there's trillions and trillions being traded in right now in fixed income, in currencies, in commodities, and all of these derivatives trade back and forth. Bitcoin is going to be the basis, will be the basis for a similar kind of trading with many instruments. If you think about it now, there's a yield curve across securities. You can trade that. You can trade cross currency, but we're still very, very early. So we'll have billions and billions being traded, and again, they're based on Bitcoin as a basis. There's securities that are being created, and they're based on top of that. So this is the real bridge from Bitcoin to the financial markets, and therefore a benefit for all of us in this room. So, where are we with Treasury? With Treasury, we are incredibly excited and incredibly honored to have had some great support from great investors. This was a founder-led round, which means that we didn't use any investment bank. That's pretty much the network that we had. And there's a couple of benefits. One is that for Bitcoin, it's very important that you have the same mindset. You think about things long-term, and the investors we have are all long-term investors in the space. Winklevoss, I mentioned, they backed around. David Bay Nakamoto, obviously a real OG in the space that actually created the whole Commons ecosystem. They're core investors of ours, and we have over 50 investors globally that invest in our rounds. We did acquire Bitcoin immediately, so we have 1,111 Bitcoin, which puts it in the top 50 globally of Bitcoin treasury companies. It's clearly only the beginning. But we are active, we are live, we're kicking off, and we obviously have the ambition to become the largest Bitcoin treasury company in Europe. With our planned listing in Europe and Euronext Amsterdam, that gives us the toolbox that we can use that I mentioned, all the different securities, options, everything, because Euronext is fantastic infrastructure to do that. And then finally, what is super important, we keep mentioning community. Community is the core of Bitcoin. Bitcoin is, as some would say, in itself, the strongest social network there is. That's why I acquired the Bitcoin Amsterdam conference. There's all of you here, come from all over the world, the best speakers to come, people to learn from each other, people to network, get to know new people, and also expand the ecosystem, get new people in, get new people to learn from this, get the media in. We have tons of media here. Make sure we all carry out the same message. So with all of that, we're here to bridge ourselves into the next part of the digital golden age. And the fact that you're all here is a testimony to that. We're super proud of it. We hope you have a great next couple of days. And if you got any questions, come up to me, network with each other, go meet the speakers, and hope you have a great time. Thank you.
Bitcoin Magazine news desk here in Amsterdam 2025. And on the desk we have Brady Swenson, he's the co-founder of Swan. We've got Christina, head of PR, BTC Inc., and of course the
Swan plus philosophical. Very cool. Yeah.
Okay,
Yeah.
fantastic. All right, so we're looking forward to your talk tomorrow, Brady.
I'm excited to give it.
Folks, be sure to hang on and make
What-
sure you listen to
Could
that.
you remind the audience, because it'll be streamed live. What time is your talk?
It's at
One more time?
10:45 a.m. Amsterdam time.
So if you're in New York or something, that's
It'll be like
4:45
middle
a.m.
of the night.
Yeah.
You'll have to catch the recording.
All right, fair
Yeah.
enough.
And along those lines, our next talk on the main stage is on Bitcoin as a generational wealth building strategy. So a lot of what
Yes.
the
Yes.
folks at Swan are
Right
dealing
up
with.
our alley.
So let's have a listen.
Good morning, guys. It's early morning. I know. I understand. Not a good time for live stream, but I'm here anyways.
So many people, that's brilliant. Well, my name is Stefania Barbaglio. I host a podcast called The Financial Fox. You should all subscribe and watch my video. And then I've been in the Bitcoin space for over 10 years and in capital markets for over 15 years. So obviously I've been dealing with many investors, and Bitcoin has become the apex assets for corporation, for investors, and that's what we are going to be discussing today. How do you build wealth?
Good morning, fam. Good morning. Early live stream. Let's start with the early live stream for that, guys.
Okay. Couple of tries, and the magic finally worked. Excellent. Great. Excellent. Great to be here this morning, everybody. Let's go ahead and get started with a couple of things that came out this morning. Polymarket signing a multi-year deal with the UFC, becoming the official and exclusive prediction market partner for the UFC. The betting folks, DraftKings, FanDuel, know that they need to be both in sports betting and in prediction markets. They are both getting there as quickly as they possibly can. And it's going to be a fight to the death amongst all. I expect to be bombarded to no end, as all you should, with advertising. This is going to be just an incredibly expensive marketing campaign as they go ahead and fight for market share. Other things that came out yesterday, so the hottest sneakers in the world are no longer Hoka's, but ON or On. Their market share, their sales, their profitability is racing faster and higher than Hoka. They raised their full year guidance. Coffee companies, Starbucks, Dutch Brothers, all had a relief rally after Bessent said that bananas and coffee beans are going to be dealt with separately with respect to tariffs. Sony ADRs, so Sony stock here in the United States, but also overseas, reaching their highest level since the early 2000s. Incredible. Took 20 years to get to a new all-time high, off the back of the company's second quarter earnings. AMD, the CEO, Lisa Su, was on TV yesterday after they reported as well. Business expected to grow more than 60%, 60% every year for the next 3 to 5 years. AMD also was up 9% yesterday, and AI chip sales are expected to grow at an 80% annual pace. The Dow crossed 48,000. gaining almost 1% on the day, 0.7% on the day. NASDAQ, Russell, not so good relative to the Dow. Silver, new high, 53 bucks plus, up 5.4% on the day. The last run of the United States penny has run its course at the U.S. Mint. We will not get any more. It's over. It costs too much. It's almost quadruple the amount to make versus the value that it is. It's like, I think, 3.7 cents for every penny is the cost. The typical home buyer in the United States, this statistic came out last week, but I didn't shout it out, so I'll shout it out now. First-time buyer, crossed 40 years old, highest on record. Italy's birth rate is down to a record low, lowest since 1861, of 1.13 children per woman. Only 370,000 babies born in Italy last year. I believe that that's just a general trend all across Europe. Raphael Bostic is retiring from the Fed. Been on it since 2017. Will retire at the end of February. We will talk about that entire process of renewal of 5-year terms of all 12 Fed presidents. And just lastly, on electric vehicles, Rivian, which makes mostly trucks, I think. That's what I've seen. I've seen Rivian pickups and Rivian standard SUVs. I have not seen any other Rivians. I don't know if they make other models, but they have packaged a pay package for their CEO that rivals Elon Musk's package. Not in terms of size. He can't get to $1 trillion, this guy, but he can get to 4.6 billion if everything goes right, which is, I mean, with all due respect, it's absolutely insane. This guy's package is way more outlandish, even though the size is nowhere near the size of Musk's. But what's Rivian? It's just another EV company. It's got no, I don't know, robots, self-driving cars.
4.6 billion? Man,
Yeah.
I feel really bad for this. He's a poor dude, man. You know, this is such a small pay package. You couldn't get $1 trillion pay package? I mean, man, I feel bad for this guy.
Right. On the other side of the EV, on the other side of the EV spectrum was Lucid, which, forget about what the next 10 years looks like and the CEO pay package. It is dealing with the here and now. It announced that it needs to raise $875 million in converts, and therefore its stock came down. So the liquidity reality of these companies may be more potent than the pay package or the potential sky-high pay package for their CEOs. So we will wait and see. So in any event, that's the rundown, I think, of a bunch of stuff that caught my eye yesterday and overnight. When we get into crypto, I will talk about the conference that I was at yesterday. It was great. Really, really great. Very well attended. And actually very worthwhile panels. So I'll get into a little bit of substance later. But in any event, let's start with the Fed and Bostic. And Infra, anything to say on the subject? You want to go ahead and educate the audience on how this all works with respect to appointment to the Fed and terms and so on?
Well, the finer details of that I don't really know, because in my opinion it doesn't matter. What really matters is kind of the general direction that the Fed is going. We know if we go back about a month, really arguably about 2 months, there started to be stresses in the repo market. We know the repo market is about 3-ish trillion finance per day. So it's incredibly large. We also know that the largest buyer of U.S. Treasuries is highly levered hedge funds in the Cayman Islands, levered 50 to 1, 100 to 1. This is like well documented. The basis trade has been been written about by the SEC, by the CFTC, by the Fed. Numerous, endless ink has been spilled about the basis trade and the high amount of leverage in the basis trade. So the Fed themselves come out and report, oh, by the way, about half of all U.S. debt was bought by hedge funds in this tiny little tax haven with an annual GDP of $7 billion, population like 40,000 or something, $7 billion GDP, and yet they are the largest foreign creditor to the U.S. by a long shot. 1.8 trillion, Japan is 1.1. So they're almost double the size of what we thought was our largest foreign creditor, Japan. So that trade is financed in the repo market. The repo market, as evidenced by SOFR spreads, was starting to show signs of kind of falling liquidity, poor liquidity conditions. Back again, like 2 or 3 months ago, everyone started to pay attention to it kind of late, but you could see that there was stress building going back to like August, arguably even late July. You could kind of start to see it, and that is where that trade is financed. So in order for the U.S. Treasury to fund the government, they have to issue what we know now, more and more bills. Well, with the government shutdown, the TGA was getting ran up. That was squeezing bank reserves with these massive bill issuance. That was therefore squeezing repo markets. You have Logan, who used to run SOMA at the Fed. I made a really big deal about this at the time, but like a month ago, she had comments at some speech. She was talking about the repo market and stress in the repo market, and seemed pretty alarmed. And it was like, oh wow, this woman used to run SOMA at the Fed. She seems pretty worried. Maybe I'm not so crazy. Then Roberto Perli, yesterday, had some more comments, and he seemed somewhat concerned about the repo market. And again, if we get another 2019 repeat there due to scarce liquidity conditions, then what you have is forced selling by about 1.8 trillion in forced U.S. Treasury selling. Can you imagine what would happen? Now, various think tanks have kind of modeled this out, and basically what would probably happen is the Fed would literally assume the basis trade, that 1.8 trillion basis trade, they would just assume it. Short Treasury futures, the long cash trade, they would literally assume the entire trade. That's kind of what's been modeled out. But yeah, you have like a systemic risk with SOFR because so much of that basis trade is financed every night in the repo market. So with SOFR, if liquidity conditions in money markets start to get too tight, which we know they are with the TGA ripping higher to about $1 trillion, and bank reserves falling to about 2.8 trillion, almost 2.7, which is the level that some have put as scarce reserves, or starting to get into the territory of less abundant reserves, then yeah, the whole thing unravels, where you have SOFR starting to squeeze the funding leg, right? The basis of the basis trade could go the right direction, right? Treasury futures could gradually, fall off. That short could work, and the basis itself doesn't have to widen. But if the funding leg, which is again every single night they have to roll this trade in the SOFR market, if the funding side starts to get squeezed, it doesn't take very much when you're levered 50 to 1, 100 to 1 to start to squeeze your profits into a margin situation. It could all unravel, and you could have up to 1.8 trillion in forced U.S. Treasury selling. That is kind of by definition systemic risk. So you have to have. I think they realized, whether it be Logan with her comments. This was probably a month and a half ago. So it was a while ago that she in her comments And again, she used to run Soma. Then you had Pearlie yesterday, currently runs Soma. And even Jerome Powell, gave an entire speech about what is normally a very boring, very technical, very wonky sort of thing. I see all that. I put that all together as like a bunch of signposts that they are worried about liquidity. And so what's the answer to that? The answer is more liquidity. This is why QT is ending December 1st, and they're not going to call it QE, but balance sheet expansion is coming back. The antidote to this issue is more liquidity. It's not lower rates, it's more liquidity. Well, how do you do that? You do that by expanding your balance sheet, because that is the asset side of the balance sheet, but there's the liability, which is bank reserve. So yeah, I think that the general direction matters much more in terms of where we are going, rather than I did see that news, but I just think the kind of day-to-day fluctuations with these various Fed members, I don't think they really matter that much. I think that what matters is where they will be forced to go, which again is kind of what all those signposts lead to.
Let me go back for a second. Was the impetus for the trade the government shutdown?
No. So SOFR started to become elevated before the shutdown. If you go back to late July, that was really when SOFR RRP started to move up, that spread. And so that was before the shutdown. Now, the TGA rebuild did start before the shutdown. And so by doing that, what they're effectively doing is they're removing the liquidity from the system. This is why people, it was very popular a couple years ago. People look at Fed net liquidity. You always minus out the TGA, because as that TGA balance is going up, Bessent talked about rebuilding it, I think back in May or June, or it was quite a bit ago that he started to rebuild that. And that was when I first predicted, by the way, that there would be a liquidity issue that would eventually force them into QE. I said all this back in May or June when Bessent announced the TGA rebuild. So because just mechanically, the only way you rebuild the TGA is by removing cash from the banking system. Removing cash, and sure enough, bank reserves fell from 3.15 to 2.8-ish. And where that level of scarce reserve, abundant reserve, no one really knows. But it started before the shutdown. And look, maybe I'm not a big 4D chess guy, but maybe there is a 4D chess argument here where Bessent's a market practitioner, right? He gets repo, he gets money market, he gets all this kind of wonky stuff that most of the academics would never understand. He gets it. So did he engineer a red light flashing to scare the Fed into easing liquidity conditions? Maybe. Look, I'm generally not in that camp, but you could make pretty persuasive argument.
Got it. So let me go back for a second, just for the audience's knowledge, right? So the way the Fed works is that all 12 presidents of Federal Reserve banks sit 5-year terms, and they all renew at the same time. Yes, all of us that are voters think that this is probably a silly construct for such an important enterprise inside of our system. It should be some sort of staggered leadership, and there should be a little bit more of a set of confidence that there's continuity, as opposed to the entire thing potentially getting flushed. Now, it's never been the case, at least as far as I know, that the entirety of the 12 presidents have walked away in one full swoop, whether by force or by choice. And then you get a whole new cohort that has to get up to speed. But in any event, 5-year terms, February is the time, and it's in years that end in a 1 or a 6. So this coming 2026 February, all of these presidents will face reappointment, and they must be confirmed by the Board of Governors in Washington. Who is on the Board of Governors, I do not know. Forgive me. I'll take a look at it and come back to you on that. With respect to the government opening and data generally, we've been told that the October inflation numbers and jobs reports will, quote, likely never, unquote, be released. That's what we've been told by the White House. So there's a significant gap in data for Eladio. Before you get maybe to the conspiracy of all this, right? Let me just put it out there that we're not going to get it, and the Federal Reserve is going to be, I think, operating in a very rare set of circumstances here in terms of what will be available for the Fed ahead of its December meeting. I mean, we're in an active, zone. We're in the middle of the theater. There's action going on. It's not like we are not expecting, or the market is expecting 100% that the Fed does nothing. And not having data, and this Fed being so focused on being data dependent, this creates a quandary of
Funny.
sorts.
Monkey
Eladio,
tricks? What is that?
you go and attack that first.
Well, I
Yeah,
assume
thank
you're commenting on my response to the Federal Reserve, Susan Collins yesterday.
Let me
Where
see.
No, I'm just commenting on. I know you all too well, and your hand went up very
Oh,
quickly.
money
So
tricks.
I know.
What am I
know
talking
there's
about?
something going on
Well,
there.
the Federal Reserve yesterday, Susan, or at least Susan Collins said the weirdest thing. She says that the Fed's policy remains mildly restrictive, and she would hesitate to ease rates further. And Sarah Eisen pointed out in a post that the only major data point to come out since the last meeting was a CPI report showing lower inflation than expected. It's a little weird, given the fact that we probably lost a half a point in GDP with this ridiculous circus of a lockdown. And I agree with your
Interesting, Brian.
sentiments about are we supposed to be happy now that they reopened the government after 41 days and they put us through this exercise? So if the economy is weakened slightly because of this lockdown, and then there's going to be a readjustment period into the end of the year, and now we have Info, who I respect eminently, about and I believe what he says about the repo stress. Correct me if I'm wrong. Why would anybody come out and say that the Fed's going to be more restrictive at this juncture? It just doesn't add up. And to me, it looks like the Fed isn't as independent as we would like them to be, that they're actually putting not their thumbs, but their hands on the political scale.
Yeah, exactly. Like, look, this is part of why I always fade, with all respect to David's questions about
thank
the
you.
Fed.
Thank
This
you.
is why
I like it.
Always fade it.
I like it.
It's because, it doesn't really matter which person is on the Fed. It doesn't really matter what forward guidance. The whole thing is kind of kabuki theater, right? We know they're not going to let the U.S. Treasury market fail, right? We know now that almost half of all U.S. debt issued in the past 3 years was bought by highly leveraged funds in a tax haven.
Same topic, kind of
So
close
we
to what
know
they're
that if there's
discussing. I
funding
mean,
stress due to tight liquidity. What do we think they're going to step back and let the 1.8 trillion?
I mean, if you think about it,
US
if
Treasury, forced US
wherever
Treasury
we're
selling,
heading, I mean, a lot of
I
people will tell you
personally
we
don't think so.
we
I think
may
that,
need
that matters much more.
quantitative easing
the-
to start, but
each individual person and their dynamics.
the more money you
and what
print,
they
the
say
more
about,
you just keep
interest,
inflating
it's all
stuff.
kind of, once you see the bigger picture, I think it matters much less.
Let me just, for
Mm,
the audience's knowledge, so Susan Collins is the president of the Federal Reserve Bank of Boston. What is important about
so-
Susan Collins, and I'll
yeah.
get to Sarah Eisen in a second, but what's important about Susan Collins is a month ago, mid-October, she made the case for more cutting. And now
This would be a good
she sees,
book to
quote, a
read.
high bar for further rate cuts. In the
Sovereign
absence of data,
individuals. Okay, what is this
and
about?
having gone through a shutdown, which certainly slowed the economy down. So I don't really know
This is another one.
where she's
I need to
coming
read
out
a lot
of
of this
especially
stuff.
having changed her
So
position
I'm like,
of just 30 days ago.
Well, Dave,
who doesn't like money
Yeah.
printing?
without
But
data, David.
I mean, even Trump and the
Yeah.
Republican who didn't like giving
Did you see
$2,000-$3,000
Reader,
checks now.
his
So
interview
at
with
least
Bloomberg
2,000
yesterday?
right now. But
I did not. I saw you posted it, but go
So-
ahead, give us a summary.
He's one of the top
Well,
five.
I
you
mean,
gotta
free
tell-
money
you
is
gotta tell
good,
the
but
audience
unless
what
until everybody got money to spend and keeps buying stuff and
To what he says. Then
things
you add into that,
just
he's
get
one of the
worse
top five
than
contenders
after COVID.
for next Fed share. And
So
what he
let's
was
see.
basically
Let's see.
saying,
December
there were a
1st
number of,
hits
I
and
think,
we
critical,
they
points
won't
that
they
he
won't
made.
technically
He made
say
the point
it's
about
gonna
the
be
kind of K-shaped
quantitative
economy, the lower
easing.
leg of the K. He made the point that
But
that
I'm
lower
very
leg
sure
is
we're gonna print
basically,
money.
Paying interest, right?
Because
And the upper leg of the K is
the economy is
collecting
not
interest.
looking
He
good.
basically said that. And so to help the K-shaped economy, you have to have the lower interest rates, not only the short-term, lower short-term interest rate, but lower long-term interest rate. And so he starts talking about, what is the single biggest thing that could help
The
the
secrets
average
of
American, the
Federal
real
Reserve.
economy. This is what I've been
I need
saying
to
for
look
like a
into
year
this.
now, which is the
Huh.
real economy is priced off the 10-year.
Thank you,
Whether
man.
it be auto loans, credit cards,
Now I fall
mortgage
into
rates, it's all
an
priced off the
entire
10-year, which
loophole.
moves independently
Look into
from the Fed. He basically made
crazy
the point
books here.
yesterday that the Fed doesn't really matter. The federal funds rate doesn't matter.
the Fed.
What
Huh.
matters is what the
That would
10-year
be a weird
yield
thing.
is doing. And
I mean,
really, again,
looking into the
because it's
Fed at
somewhat
all, I
independent
mean,
from
what
the
do they
Fed,
even do? It's a
they
private
will need
entity.
to
I mean, it's just not even public.
because the
I mean,
the
it's not
activist
even
treasury
owned by,
issuance
it's not
under
part of the
Yellen,
government. That's what
started
I
under the
mean.
last administration where they mechanically reduced
No, that
the
one
amount of
was
supply of
like
long,
15,
10, 20, 30-year
the
bonds. That
conservative
mechanically
challenges,
boosted the
the
price and
reserves.
artificially suppressed the yield. He's basically saying, look, the Fed can get a
Yeah.
huge bang for its buck.
That's what I used to think
We
is
already have
indispensable
constricted the amount
institution
of
within
long-term
the
debt
country's
issuance.
economy.
So
if not
then
problem
if the Fed just
function.
comes in and
The
buys,
end of the
wouldn't
Fed,
take very much
all
balance
those
sheet
American history
to
economy
move the
and
price
fascinating.
of the
I
10-year
mean,
bond
until
up,
I
therefore, suppress the 10-year
listened the
yield. He
documentary
made the
was
point
that
again,
was
this
like
guy is like
down on
BlackRock,
how
chief
the
investment officer.
Feds
He mentioned the
were
steepener
formed.
trade.
I thought
And
they
how
were part of
everyone,
the
has
government,
been trying to put the steepener trade on, and
especially
it's
the
getting
federal
blown
government.
out.
Even the
And he
name,
says,
I
look,
mean,
like, it makes
the
perfect
Feds.
sense. He
You look
basically
like,
told
oh,
you,
you're
stop
dealing
trying
with
to
the
put on a
Feds.
steepener
No,
because
there's
you're
nothing
gonna
Fed
get
about
blown
it.
out by the Fed. And the Treasury, which is mechanically reducing. So I think that's really important. He's basically signaling not only, if you care about the federal funds rate, he's signaling not only lower federal funds rate, which we kind of know already.
That's
is the
true.
Direction. But he's also signaling.
That's true.
balance
All you
sheet
need is food.
expansion at the
You can
longest
grow
rate,
all the food you
long-term
need in
rates
your
down. And
backyard.
he says, okay, housing.
No, we
supply
just need
builders
silly
will come
flowers
back
that we don't
online
even
with
need.
lower 10-year yield, mortgage spread.
Yeah,
He mentioned the mortgage spread,
that's the
which
crazy
I
part.
love
You can
because I
convince
talk
a lot
about
of
this all the
people
time.
that
If you
Feds,
look at the
no
spread
Fed in
over
it.
the 10-year Treasury of the average mortgage,
They're a bunch of
that
thieves
spread is still
that,
relatively
manipulate the
elevated,
economy
and it's moving in
however they
lockstep
want.
with the MOVE index, which is
You
bond
know?
market volatility. And so
Create fear when they want,
kind of
crush
one
the
of those
market,
interviews where
and
you're
their
watching
best
it,
friends
cheering, because
to
it's stuff they've
invest,
been saying
buy
for
the
a
best
long time now,
stocks,
which is you can
and
get the
then
bond market volatility lower. You don't even really have to get the
and then you
technical
guys stocks that are
itself that much
crazy,
lower.
like 200%, 300% out, and everybody jumps on it, and then they crush everybody, take profit, and keep the money.
Above and beyond that 10-year Treasury yield, that will help.
Make
help
loans
new
harder,
new home
raise the
buyers,
interest,
but it'll also
so nobody
help,
else can
bring
profit.
Supply online. That'll
It's
be
like
claims
it's like a
as
leech,
inflationary. I'm not so sure about that
just
part,
sucking money
but yeah,
from everybody.
I posted about it, so if people are curious on like the full comments, I basically transcribed it in my last video.
Awesome. Thank you for that. And by the way, Mary Daly, the president of the San Francisco Fed, is currently
It's
speaking,
insane, man.
and
Disgusting.
saying that yes, there is still work to do to bring inflation down to 2%. No surprise there. But commenting particularly that the labor market has slowed quite a bit, therefore potentially tipping her hat towards cutting further. Eladio, your thoughts?
We won't know a lot of this data because 40 days of government shutdown is not.
It's not complete because, as Robert knows, when you expand the balance sheet, that gives
Over
the
40 days, I guess.
ability to choose
So we won't know how the economy was hit really badly or where everything was okay until January maybe and February, and that could be the reasons why the market would crash. I'm just saying, I don't know. It's just like the stock market is doing good because there's no bad news.
For Janet Yellen,
Unless Trump decides to talk about
he did everything. He set the
tariffs.
table perfectly. He got us out of
You know, watch the moment that it's announced. I don't even know if the government shutdown, you know,
there was no,
end of
here we
government
have
shutdown is
pretty much
announced
contained,
yet, but
that's one
you
way
could
that
see
the Fed is
some
gonna
go
control
up.
it.
But it's
Robert,
interestingly, I was watching today how Bitcoin did not even react positively to what it's supposed to react to. You know, the Bitcoin conference
Excellent.
in Amsterdam. And usually, whenever the Bitcoiners have a conference, the market they just pump the market.
Getting into a deal with
Yeah.
Nova.
Yeah, and this is a silent period. They know the economy is bad. They know they don't want to print money. And
By the name of
like if
Number One, which has been an activist investor.
I mean, a
in
negative
around oil and gas
news would
companies
have
where
helped
three of
the
them
idea, but the economy is
are
not
talking together
really,
to invest
really
in
bad. Like we're not in a
electricity
recession.
generation
I mean, yeah,
in
people
data
are losing
centers.
jobs, but also jobs are created
Thoughts
because
on
it's a
that?
holidays.
Also regarding
People are also
EVs,
spending more because
sale,
it's technically it's a
of the
holidays.
business,
So
and anything else
I
going
mean,
on in the energy
the expectations up to $1 trillion spent, like the biggest we have seen. So, economy that's spending that much, it's not. We're not in a recession.
with us, or
You know what I mean? So that is kind of a good news, which they don't want that to, you know, become the narrative. So then they can keep cutting rates and whatever Trump wants, like cut the rates. We need to be in quantitative easing, so the primary doesn't look like really bad for him. You know what I mean? That's why I believe that's why he's giving $2,000. He's like he already seen what could happen, where this is heading, with only few elections that really turned. You know, and he's like, oh, I'm not in the ballot. I'm not on the ballot. Yeah, you're not, but you created an attitude that will destroy your party. So good luck with that, Trump. I mean, now send everybody to cool it down, to forget about what is happening, and then quantitative easing, and then more money printing, and then taking loans or whatever becomes easier, cheaper, I guess. I don't know. And over time, until maybe February, March.
Thank you, Robert.
Yeah.
Anas, are you with us or not?
I don't believe anything like super solid. We can no. These people are smart. They will not let you just grab money left and right. They'll have to suck the market. Everything, and these companies have to crash 70% because then they can put. I mean, their money is worth more, so why not do it?
There's an excellent chart. I'll
You
try to
know,
find it and post
if
it.
it's not broken,
About
just
the
keep doing it.
inflation, in those subscription
Yeah, we
services.
all there won't be any
I don't
middle
know
market,
if it necessarily
middle
was
class.
meant to
Just
track
wait for 10 years. I don't think there would be. There would be super
or
crazy
they are
billionaires,
essentially luring you in
insane amount creating some. I mean, you're talking about Elon Musk, $1 trillion.
around your neck while you
Ooh.
don't realize
What is
in
next?
terms of
$10 trillion?
raising the prices. But
$100
at
trillion?
some point, we'll
Like,
see how much
is the value of
elasticity
money
there
nothing
is
anymore?
in the pricing
I
for
mean,
those
is he?
services, especially since, you know, if you watch all of the content on a particular platform and it's not churning out new content
Exactly.
fast enough, you know, you'll go ahead and
Grow
rotate
something new
away,
backyard.
kind of
If you can,
come back when there
if
is
you want to
enough
buy it,
content,
buy
go ahead and bring it back
a
to
land
it.
or
But in any
area
event,
that's
I
outside
think,
the bigger
you know,
cities.
the
That's what I would
you know,
probably
Disney
say.
is
So then you
they
have
can
more
flex the
empty
situation
space
at
to
this
grow
point.
whatever you want. I
With
mean, I have
Javier
never done it,
coming
but
to the
that's
end of
that's the
his
next thing I'm
tenure,
gonna do is like
with
the
respect
best thing that you can do
to
for you and your
ESPN
kids and you can train them right
relaunching its
now
app,
is
closing
just
its
teach
betting
them
business, which we spoke about with
that you don't really need to
entertainment,
depend on
a bunch of
supermarkets or buying
rotating
stuff
heads
or the
there.
cash. You
Then
can grow the food you need in
the
your
um,
backyards.
the traditional TV
You know,
side of
have a few
things,
animals that you
with
once in a
respect
while when you need
to
a little bit of
you
protein.
know, ABC,
Yeah,
the
yeah,
shakeup there and the problems that it
exactly.
had with the Trump administration,
But
and then
a lot of
Mark,
people
are they
won't be
getting
able
too
to afford it.
expensive? I mean, this
So,
is just not
or
an
if they
easy,
can, getting water is gonna
set of
be hard
circumstances.
for a
There's
lot
of moving parts
a lot
for
of
the
areas,
company at this point,
or the
and
electricity.
not to say that it's
And we are
not,
so dependent on
going to be a success story. Certainly, there is
on
enough in there in terms of
easy life.
ingredients,
Go buy
for it to have
McDonald's
a second
burgers
back
and
at
eat it
being,
and do
the cat's
nothing.
meow in the media space. But at this point, it is
No,
not
I have not.
not an easy story.
Let me
to
look
go ahead
into
and
that.
tell.
Toss.
Wanted to talk about. Oh, all right, Eladio, go ahead.
You know, before you change topics, one of the largest companies in the United States just lost a third of its value in 30 days after issuing debt in order to fund
Exactly.
data centers. And I think you know what company
That
it
is
It's
my
Oracle.
plan. Even if I
And-
have to sacrifice a little
and
bit of convenience
One
to
thing
get
that
what I
that
want,
I've noticed, I
but
don't
we
think I
we
ever
have to understand
recall
like
hearing
this
so much
that is
about
what
debt
will
issuance from a
what
sector
can
that
maintain
really
your
never
family
had to
with
issue debt,
little or
just
no
the
cost
massive amounts of cash
from
flow that
buying
they
stuff that you
generate.
don't really need
You know,
it. Because
and
if
I
you
mean,
grow
one time Apple's
everything, why would you
issued, I
need
think, a bond.
why would you need to
was
buy
to
anything from the
actually
market, like
fund the dividend
other than
because it was
clothing
so
and
because
whatever?
the rates
Even the
were so
clothing
low,
you can
before
weave it,
rates
you
actually
can
shot
do
up
it
in
yourself.
2022. But this,
It's
and yesterday's announcement.
Oh, it's a
I mean,
place.
how many more announcements
I
are we
think
going
it's
to
a
get from
place.
AMD?
Huh?
I've already
Hold on.
started de-risking, David. I've been
What?
de-risking for the last month. I had a stock that went up sixfold in less than 12 months, and you have to be a fool to once you get to the once you get to the
Huh.
1 year mark, if you're dealing with accounts that are taxable, you'd be a fool to not trim a lot of this. And I
This is
personally
crazy.
am getting very uncomfortable with the market action that I'm seeing and the constant headlines that are.
So it's
being thrown into
100%
this market.
self-sustained,
For the purpose
yeah?
of what? Avoiding
Collect the
a correction
rainwater.
in semis until Nvidia comes and saves the day in 6 days with their earnings report.
Yeah, the designs are
guess
crazy,
what?
bro.
The stock right now, Nvidia, isn't
Huh.
making me
So they
feel
use solar
confident that
panels
that's
to
gonna happen,
power.
that Nvidia's going to save the day in 6 days, and neither is the market action. So I don't know if David Nakowski wants to, but I'm just getting very uncomfortable, and I do believe we're in the third and fourth innings in AI. We're no
What?
longer in the first, second, and third, which means that I believe
How do they
that
build
you're
those
gonna lose
kind
a
of
whole
like
bunch of
weird
companies that
futuristic
people thought
homes?
were viable companies, and in a year or two or three, the real.
Is
ones
this a
will
real
go
place or is
remaining.
this
But I'm
a?
very uncomfortable about the leverage.
It's hard to
the
believe.
leveraging of big tech.
It's hard to believe this
And
is
the amount of
something
capital that
real.
we're putting into these data centers at the expense of also, we're going to hopefully make a big transition. I've been talking for years about the need to move to nuclear energy. Well, we need to move to nuclear energy.
Are some of these
now because
homes
of the
underground?
demand that they're creating with these data centers.
So, I'm going to go ahead and comment for a second before I get to Nikoski. On your point about Oracle, let me riff for a second on Oracle, not about Larry Ellison.
Don't forget the downgrade.
The structures that is now fuel community
no
on
problem.
Earth ships.
The other day,
Uranus on the Earth
other
is
day,
can rent
a couple
out
days
for
ago,
a short stay.
Michael Burry,
Okay, I'm checking on the
who
Airbnb. They
I
even
will
have
say
it on
this,
Airbnb.
not a long
Cool
time
stories,
hedge fund
cool stories,
manager
man.
who is widely respected
Yeah, that's
for
what I'm
all
talking
of
about.
his
You can literally do
portfolio
that.
risk management,
This is
lack
insane, bro.
of beta, incredible Sharpe ratio. Michael Burry, to me, I'm sure he's a nice guy.
That
and
is
I'm
why
sure he's
it's
a smart
under
guy,
it's like
B,
the heating
but he made money
geothermal.
because
Okay,
of
okay,
the Big
okay,
Short.
okay. So literally
So
like no
for
resources
him
coming out
to
of
say it
outside.
takes a
It's
lot
like
to
100%
be a
self-sustained.
successful
collecting
fund
money,
manager,
solar
and if you want to
panels.
be in the top
Huh.
10 list, I certainly am not there. You have to produce years upon
Old
years
trees and bottles. So
of
okay, so that's the only
great
materials they're
returns.
using to build.
Okay, managing lots of capital. Michael Burry came out a couple days ago and he said very vocally, I'm shorting.
Didn't even know
Meta, I'm
this.
shorting
Yes, thanks
Oracle,
for sharing.
profits are
See, this is
overstated.
really nice. I
Whether
mean,
it's true or
and if you
not,
check out the area, a lot of people will be
please,
saying like,
audience,
"Oh no, this
these
you can't
people
even
that make
sustain
these
life in this
statements, unless
space.
they're in
Like
the top 10 of
nothing
all
grows
time,
here
they're just
because
mere
the
humans
the
like me and
land,
you.
the area looks so dead.
And
Like I
why
mean, it's
someone
not
would go
completely
out and
dead,
say
but it's
that
like it
if
looks
they,
like a
you know,
hard, like tough
they're
area,
not ready to go
like
ahead
dry and no
and
rain and
take that
stuff.
bet to
Like
the
there's no
grave,
big huge
right,
forest,
to the end, I don't know why.
unless
But the
I
incredible
cannot see
thing
it.
is, last night we
The
find
structures
out
are
that
crazy,
Michael
bro.
Burry has
Sheesh.
deregistered his hedge fund. And he sent a very short letter to his investors and said that he's on to much better things. Now, what exactly
We build
Michael
non-new
Burry
homes.
is
You
doing,
can also see
where
some
he's
of our
going, why he's
portfolio.
doing,
We also
just remember, folks,
building them.
a lot of stuff that's done in the public
Sheesh.
sphere
So they would even
is
teach you.
theatrics, especially when people are able to talk their book. Okay? So the same thing with
They
a
will
guy like
teach
Jim
you, bro.
Janos. Why he's trying
Shelters,
to make a
sewage,
second act in
treatment
life, I don't
centers.
really know. He
They have
doesn't
a
manage anyone's money
garbage
anymore. He only
management,
manages his
clean
own.
water,
I don't know
and
if
they
he
have
gets excited
energy.
about being on TV or on the radio or being quoted in the
They
paper.
have food.
But just remember, they are mere humans. If they haven't had years upon years upon years of great track record and making great calls, and no one bats 1,000, let's be very, very clear. But don't believe the hype, folks. Don't believe the hype. And I will say, with respect to all this, this year is particularly hard. Particularly hard. Because if you look at the indices, we're in multiple years with double-digit returns, right? With no fees, right? You don't pay any fees to those ETFs. Your return profile, I mean, you pay minimal fees, right? But
So they're in Montana, New Mexico, and Alberta.
The index is up is essentially what you're going to be up if you own the ETF.
That's crazy.
For hedge fund managers to go ahead and justify their existence, and that's why we're seeing, you wouldn't know that, but in the event-driven space, another fund that used to manage $2 billion, closing down, they're unwinding,
Hey guys, thanks for
essentially
coming.
turning into a family office. Investors are coming to their GPs and saying, why can't you return for me better than the market? And the answer is undoubtedly 9 out of 10 times, maybe not 10 out of 10. 9 out of 10 times is watch me perform during a market downturn.
Wow.
The response is, well, I don't know when we're getting a market downturn. If you can't beat the index when the market is doing well, and the only reason I pay you fees is to go ahead and save my ass when market is down, and we haven't seen a market downturn in forever, and you can't tell me when we're going to see a market downturn, I can't continue to look like an idiot to the folks that I have to answer to, at the head of the endowment, the foundation, the pension fund, whatever it may be. Even if I am the CIO, the chief investment officer, there are actually people that rely on my capital, the capital that I manage, to go ahead and operate either a college or a research or, give away grants and so on. And so it's becoming increasingly hard.
Fascinating
in the
stuff.
asset management industry, especially the expensive asset management industry of 2 and 20, or whatever the reality of it is, 1.5 and 15, 1 in 10, whatever it is. But it's increasingly difficult. And so again, I go back to Michael Burry. I don't know what his returns look like. If anybody knows, please let me know. If you know how much money he managed, by the way, also, please let me know. I'm curious. But at the end of the day, just take everything that everybody says with a grain of salt. That's all. Go ahead, Nikowski. Over to you, sir.
Yeah, I think great comparison, comparing Michael Burry to Dexy's Midnight Runner, which came out with the song Come On Eileen, and Tommy Two-Tone, which is 867-5309, which many of us know.
How about AHA Take On Me? Also.
Right?
There you go.
There's too many one-hit wonder bands, but you know, I mean, there's people that get thrust in the spotlight, and they get under a microscope, and everyone wants to, you know, analyze and try to beat them up because they came out with one great call, and it doesn't mean he won't, be right at some point in time. And timing for me is everything. You know, I think probably a lot of jaws dropped in here when I shorted Oracle at 340. Okay, and we said it on this show. Okay, you know, in the last 3 weeks, you know, going on to what Eladio said, you know, I've been shorting the quantum stocks with like absolute precision. You know, there's ETFs out there 2 times short inverse ETFs, and you know, there's so much money that went into these things. I think you know, Rigetti went up to 17 billion market cap, has 10 million in revenue. Like, I don't know, you know, if it's retail. I don't know how an institution can do it other than to play momentum. And you are certainly seeing a lot of areas in the market, you know, break down. And those are the signs. You saw the altcoins, and I mentioned it on the show at that time. Altcoins, you saw gold correction, silver correction, quantum stocks, the, you know, nuclear stocks. You know, they're getting taken out to the woodshed. And, you know, the funny thing is it's not having any impact on the indexes. And again, it's due to the skewness of the weightings of the index. You know, like I said, I can be a bull and I can be a bear. You just have to pick the spots. I've been rolling out shorts, you know, more so in the last 3 weeks than I have ever done. And, you know, and you know, the interesting thing is financials are not breaking down. You're not seeing it in high yield spreads blowing out. I mean, they've come off the low, but there's no definitive, you know, move to blow them out. You know, capitalism by itself and just keeping liquidity up there can get, you know, can move stocks to unrealistic levels. You know, I took the Palantir short just before earnings on the PLTZ. You know, picked it up at 496 in the pre-market and sold at 630. You know, if I can, and I'm not a trader. I mean, I'm the one guy that's not really a trader in here. And there's so much opportunity out there if you are. And I think the traders have to be absolutely killing it here, because I am not a day trader. I am a buy and hold guy looking for long-term trends. I'm seeing more and more come under pressure. CoreWeave looked absolutely horrible even before the earnings. I mean, it shouldn't surprise anyone that these things are breaking down. NBIS breaking the relative strength uptrend, threw it in my profile yesterday. You know, it's things that have worked very well are starting to come apart. You know, you see it in Meta. So, you know, if there's a trend that I'm seeing, it is when things don't make sense, you better perk up, pay attention, because when logic ceases to prevail and things start to get illogical and things get shaky, that's when problems arise in terms of the market movement. And, you know, being prepared and at least hedging yourself at a time like this, I think, is the wisest thing to do. That back to you, David.
Go ahead, Eladio.
Market timing is everything. Nice to hear you say that, my friend. You get 2 people to buy the same stock, believe it or not, even sometimes in the same day, and the returns aren't the same. So timing is everything. But when you see gold go up parabolically, when you see an all-time high in silver, I'm just not that type of person that ignores things because maybe the Fed has become smarter at detecting problems and attacks them earlier. You know what? In the end, you use what works. And when you see the precious metals go up and you see the type of breakdown that we saw yesterday in the Mag 7, including NVIDIA, has anybody ever seen NVIDIA down and see such a parabolic move in every other semiconductor? I've never seen that. I mean, David, have you?
Yeah, I mean, even the analog guys were up very strong yesterday, but my warning still goes out. Texas Instruments is now well below a 10-year relative strength.
It's all the China plays. All the China plays. MCHP, Texas Instruments, Skyworks, and Cuervo. They're merging because they would have gone bankrupt. They're low-end RF makers for the iPhone and Samsung and electronics. And look, yesterday's headline on AMD seemed like a complete pump to offset NVIDIA. Sorry, but I'm calling it what it is. That's what it seemed to me. A bully pulpit, Hail Mary, let's keep this going until NVIDIA reports, because we know, well, my gut feeling is NVIDIA's going to blow the numbers out of the water like they always do. But guess what? Didn't Palantir do the same?
Yeah, I think you're right. I think it's an opportunity to take profits, on really good numbers, and that's the way I'm looking at the market right now. And it's a twist, and when you see that twist in the market, again, I want to emphasize, a lot of people think it's earnings that predict the price movement of a stock. In reality, it's behavior. It's people push the price of a stock. And I'm not going to say that, stocks don't follow earnings. I'm going to say that when you see a divergence, when good earnings are being shifted to being profit taking, that's when you need to, really be alert and, aware of what is happening in the marketplace. It's interesting that, emerging markets, I mean, Brazil looks great, Mexico, new highs, I see the same thing. It's not any different. The U.S. dollar was unable to break through 100. You now are close to breaking the uptrend in the dollar once again. Yes, it's good for U.S. companies, but it's even better for emerging markets that have a substantial amount of debt load, right? So there's so many things in this market that are working. I'm marking up my international book right now. Cover 44 markets around the world, one of them being the U.S., 43 markets outside of that. And, the amount of charts that I'm seeing in manufacturing in China, the semis in China, are astronomical. They are absolutely gorgeous charts, but, you do have, political fallout from, that aspect, investing in a market you don't know. But literally still, every market around the world is beating the U.S. just about. It's not 100%, but it's pretty damn close. So, just be aware that, there's other places to be. You don't have to be, all in the U.S. market. I know there's risks. I know people will say, I will never invest in a foreign market. You know what? I'm about performance and getting my clients into areas that are going to outperform on a relative strength basis. And that's what I see in the marketplace right now. Back to you, David.
Thanks. A couple of other pieces of news out there. Used autos. Subprime. 60-day past due delinquency is the highest in 31 years. 6.65%. It's not a ridiculous percentage, but it's the highest that we've ever had. It indicates that lending standards either have been too relaxed, or B, that consumer at the very bottom of the spectrum, subprime, has gotten a lot worse very quickly, unanticipatedly. So, the other relating to consumer credit, I wanted to raise with you. I don't know how many people here watch the home builders, and we've spoken about them from time to time, and we normally talk about existing home sales. In the new home sales realm, right? Builders are often offering incredible incentives. That doesn't just mean dishwashers and ovens. It means below rate mortgages, right? You can go to a company like D.R. Horton right now, and if you buy a home from them, they will give you a 30-year mortgage, because they do have a lending arm. They'll give you a 30-year mortgage at less than 4%, right? As opposed to, I don't know, you can't find anything less than 6. And the reason they're doing that is because they need to move inventory. Obviously, they are the ones that lose at the end of the day because, they're underpricing the market when it comes to that mortgage. But the flip side of it is buyers, may know, may not know, may know and not care, or may know and have no choice. But the buyers are buying the home at an inflated price, right? Otherwise, it wouldn't make sense. Why would D.R. Horton go ahead and undercut the market to get the inventory going, just for their buyers? They're not doing anyone a service. What they're trying to do is move inventory at a price that doesn't put them in the red immediately. What that means for the borrower, and most borrowers, I think, might not get this, or frankly may not care because they can't afford a mortgage at 6% at that level of home in terms of overall price. But it essentially means that the buyer of that home is underwater from day one, right? The house is not worth what they're paying for it. They're paying an inflated price. They're getting a cheap mortgage. At the end of the day, it may work for them. They may be able to swallow the payment, and they can't swallow a higher payment, and so therefore they can't borrow at 6, and they can't buy a comparable home for $1 million. They can only buy D.R. Horton's $1 million home. They're overpaying for that home, but in their mind, they're getting $1 million home because that's the price tag, and they're getting a below market interest rate. So it's kind of a, I don't know, it's a little bit of a sleight of hand. At the end of the day, it's something that works for both sides, but it's certainly not what the market is dictating. They are creating this fictitious market, which ends up working for both sides because both sides
I'll be back, guys.
have interesting kind of sets of priorities in terms of someone wanting to get into $1 million home, not being able to afford a mortgage payment of more than X. D.R. Horton on the other side, just wanting to get inventory on its balance sheet, don't want to sell the house at a loss, and are willing to go ahead and swallow over a period of 30 years potentially, probably get refinanced, probably get sold. As Gary told us previously, usually stay in the home for the tenor of the loan. But at the end of the day, at some point, that mortgage is going to be retired, and it probably won't be that many years of pain in terms of what you got versus what you could have gotten from the market. In any event, just wanted to throw that out there for folks. Gary, well, wait, let me see. Is Honest here? Honest, you with us, man? You just like to be here and you have your face up here, but you're not really with us. All right, Honest, you're missed today. In case you listen to this on recording, we're missing you, even though we get to see you. We're missing your brilliant mind. Gary, any thoughts on the crypto?
I like the D.R. Horton deal, dude.
You like that deal?
Well, I mean, look, we're being a little schizophrenic here, okay? All I hear people saying is, I can't afford to buy a house. I will not leave California at a 2.5% or 3% mortgage on a $500,000 home to move to Florida, where I have to pay maybe 200 basis points more on another $500,000 house. That is $10,000 a day, a year. That is a ridiculous way to look at building a future, building your life. Oh, it's a 200 basis points delta spread. It's like, dude, who cares? That's silly. However, D.R. Horton's come up trying to solve the problem, extend and pretend. Look, dude, I literally have a guy here that replaced a window at my house. Well, it'll be in 2 weeks. I had to give him $650 for the deposit. $1,500 window. Now, this is a single guy working for himself, right, building his business. He tells me he buys his wife a $130,000 Escalade that requires $1,200 a month in insurance. He got down to $600. How many windows do you think this guy sells a year, dude? Because if he sells 1,000 windows, he's made $115,000. Okay, you know what I'm saying though, dude?
Yeah, I get it. Financing allows you to live high on the hog. I got it.
Finance half the house. Okay, in fact, half the car. It's probably 6%. But I like the D.R. Horton thing, man.
No, it works.
You know,
I
it
agree.
allows people to get into a neighborhood and the zip code they want for their kids and family. But like nothing's free here, man. I don't, you know. You can't ask somebody to reduce the price and reduce the interest rate and give me a fixed rate.
That's fine.
And give me a blowjob while you're doing it. You know, it's like, I mean, it's not the way it works.
Just don't go around saying I own $1 million home. No, you paid $1 million for your home. Your home's only worth $800, my friend. Let's be real. That's all. But you can continue to believe.
I've got a tax bill from Pinellas County suggesting that my house is worth $14 million. My tax bill went from 125 to 230 overnight.
Hey guys, don't
You gotta hire
underestimate.
a lawyer to fight that man.
You know and I know.
Don't underestimate the placebo effect.
$14 million if I wanted to today. There's no chance I could sell my house. Boom, let me dump it. Not a chance. So,
Gary, don't underestimate the placebo effect. We're in a society that is into facades and making people feel like they are, you know, in the right place at the right time and in the right neighborhood, and that's what wins elections. That's what wins elections.
Eladio, this isn't new though. These people saw their parents do the same thing.
Yeah, because the American dream was alive, and we were able to outgrow ourselves. That is, I believe, we're going to see escape velocity in the next year. The BBB is going to go into high gear. It was purposefully created to really go into gear in 2026, the year of the midterms. We're going to see, and now we're seeing an infusion of capital, probably from the Fed. So now, and don't forget, we're going to get a Fed chairman that is what? A dove. So with the QE, you know, trying to control the long end, I think that risk assets are going to have a great year after we go through this lull. But Gary, in the end, it's about making people feel like they're part of the system. And I owe Dwayne a little apology yesterday because he's a stand-up guy, and the K-shaped economy is a problem for America. We can't ignore the lower half of this country. And so because of that, I completely agree with Gary. Let people feel like they're at the right place and that they're part of a system. And let's get this economy growing again, because I do believe that is what is going to happen next year when we get escape velocity.
All right, Bob, you go first, and then over to David Nikoski.
Yeah, thanks, David. Just wanted to come up and talk about this news out of the Czech Republic. The Czech National Bank announced that they acquired a test portfolio of digital assets, including Bitcoin and US dollar stablecoins. And so just wanted to, make everybody aware of this, that while they're calling it a test portfolio, I think that there's a rift between the Czech National Bank and the European Central Bank. And despite that fact, they're moving forward. And I think this marks a significant beginning to central bank adoption. No Western central bank has done any with Bitcoin. All the banks have been saying that, they're studying it and all those things, but now they're actually putting some actual capital behind it, albeit small. Well, $1 million is not huge by any means, and they were really trying to make it clear that these were not part of their international reserves. And so I guess I just wanted to bring it up, put it on people's radar, because I do think that this is the beginning of something significant for central bank adoption of assets beyond gold that are non fiat minded. So I'll just end it there. I'll send it back to you, but just wanted to come up and share that with people because I think it is some big news.
Thank you for that. Dave, before we get to you, let me just go ahead and talk a little bit about crypto, about my experience yesterday at the conference. It was the Bridge Conference. Everyone from Jan Van Eck to super high people from Coinbase, BlackRock, Blackstone, bunch of VC folks, bunch of developers from layer ones, layer twos, but the super highest people kind of on the chain from all these places. The one, it was all very good content, a lot around stablecoin activity, a lot about ETF versus DATs, digital asset treasury companies, institutionalization, trading strategies, and it was a very informative conference. There was very little emotion in terms of people being concerned about price, and it more being about it's just a question of when. It's not a question of if, and that there is just a lot of development pushing forward. I think the most important speaker, only because she manages the most money, was Samara Cohen from BlackRock, and she was very clear that BlackRock is all in on digitization of everything, of all assets, and it's all going to be done in contrast to what JP Morgan did the other day with respect to their own internal stablecoin. They are all in, BlackRock are all in on public blockchains. They're not interested in building their own, having their own, curating their own ecosystem. They think that the way of the future is to go with open source, public blockchain, and they are, all in on it. There is a clear divide between folks that I think because of age and because of thesis are all in on Bitcoin and Bitcoin maxis and nothing else. And then there are people that are focused only on everything else. And there it is going to be a slugfest in terms of who wins. There were opinions that, ETH could be worth a tenth of what it's currently worth. And then there were folks that think Ethereum's going to 10x or 100x from here. It really is all about adoption. And then there were a couple of people with really gray hair.
Hey, Dave, does that mean that the bulls think you can get a 10x on Ethereum and the bears think that you can get a 10x minus on Ethereum?
No, they believe. Yeah, they think you get.
Yeah.
They think you'll get it. But those guys believe that it's not Ethereum, it's Solana or some other coin, right? I think the folks, the asset managers, I'll say it this way, the asset managers are focused almost only on Bitcoin at this point, right? In terms of what do I buy? In terms of development and digitization of assets and so on, even the asset managers agree that their assets can't sit on Bitcoin. Bitcoin is what you invest in, but the assets that you trade are not going to sit on that chain. It has to sit on another chain. They just don't care what chain it sits on, and they're not interested in speculating in terms of what chain it will sit on and what the value of that chain will be. The folks that are in the development world or in the trading and speculation world are very interested in what chain that will be and how valuable it will be. And that's where you get to, is ETH the 10x, or is ETH a tenth of what it is, and therefore Solana is the 10x or something else. And the guy, I was getting to this point, someone with really gray hair who was on a panel, who I respected, really thoughtful, said, look, I've done this dance before in terms of the internet revolution. none of the players that are there today are going to be the ones that win at the end of the day. There's going to be a whole other generation of players that we haven't even seen yet that will eventually come back and or will rise and will dominate when this industry gets to a point of maturity, which is very interesting.
Who was that?
Sorry?
Who was that? Can you say, or do you remember?
I forgot his name. I'll get it. I'll send it to you.
I concur with him. 100.
Yeah, he's a smart guy.
Yeah.
Smart guy. All right. Anas, are you with us now, sir?
I am, yes.
Excellent. All right, do me a favor. I want you to comment on Chevron's electric power, natural gas powered electricity foray with Engine Capital along with GE Vernova, and then also with BP selling its interesting, it has been spoken about them selling their lubricant business, and then anything else you want to talk about.
Sure. Are you talking about Chevron in West Texas?
Yeah.
Basically, this is an issue where we have really to pay attention to. If Chevron is successful in building this data center in West Texas, where natural gas is very cheap, abundant and very cheap, and as I mentioned yesterday, basically we have to remember that sometimes that gas is sold at negative prices. So this is a great location. But before we talk about this, we just remember that the crypto mining business moved there long ago. And the crypto business basically are moving all around the world. That's why we see them in places like Iran, for example, because in certain locations, gas is so cheap, and so they go there. So they are literally moving around the world to where the cheapest energy is. And we've seen them moving to West Texas, and there are some big businesses there. So for the data centers to move there, that is just normal, given the fact that gas is very cheap, and Chevron has major operation in the Permian, whether in New Mexico or in Texas. So they are where their businesses and their workers are. Yesterday, after we talked about this, one of the followers, one of the listeners basically sent a tweet saying that there was another deal between two companies. I forgot their names right now, but it's similar to Chevron. My expectation is that once the news is out and everyone realizes how cheap gas in West Texas is, we are going to see more companies coming to West Texas because of the cheap gas. At the same time, for those companies that have nothing to do with the oil business, there is an advantage there because the industry, many people are leaving the oil industry, and they've been in, let's say, in West Texas for 10, 15 years, and their kids are in school, they don't want to move out. So there is a potential for them to stay there when those companies move there. As for the downstream for BP, it seems that this is just a continuation of the oil majors getting rid of their retail and downstream and just focusing on upstream. Basically, really the money is in upstream. Now we've seen the retreat from climate change goals and the retreat from investing in solar and wind and EV chargers, etc. By the way, EV sales in the United States are dropping like a rock. So they are shying away from those businesses, and we've seen this trend being going on for a while. Now to the major news. Yesterday after the show, we had several reports being released. In 2020, in October 2020, I wrote a tweet, which is the pinned tweet. I did put this in the nest, that according to my model, there will be no peak oil to 2050. And remember, I wrote that tweet during the COVID lockdown when everything was bearish. Oil prices went negative. BP announced that the oil demand peaked in 2019, etc. So that was kind of, I'm kind of bragging here. It took guts basically to put this publicly. So I wrote that tweet. You can see it that from 2020 there will be no peak oil demand by 2050. Then we've seen others basically coming to it. Now, no one can claim they have similar forecasts simply because all the forecasts at that time by the major consulting houses and the banks were to 2045. So there was no one to 2050 except our work. And now what we see, OPEC is saying, look, there is no peak in oil demand and the outlook is 2050. And yesterday we had a major news, major change that the International Energy Agency is saying that given the current circumstances, there is no peak in oil demand to 2050, given all the retreat from climate change, etc. And then they have other scenarios, of course, if we do this, if we do this, if we do this. But the whole idea of peak oil demand now is behind us. The whole idea of ESG basically is behind us. And it is very clear that we are going to see more investment in oil and gas. Today, the IEA released its monthly oil report, and this monthly oil report did something else too. You heard me, guys, on this show several times saying that the IEA will revise up its estimate for global oil demand growth simply because it is very low. So OPEC was predicting 1.3 million barrels a day growth in 2025. The IEA was going for 700. And I debunked this several times in several ways. One of them that their forecast for U.S. oil demand is only a portion of reality, and therefore they have to move up. And today they did. They did revise up their estimate for growth in global oil demand, and I expect them to continue doing this probably until next March. So we are going to see more upward revisions of global oil demand. All of this proves the point that this manufactured bearishness that I've been talking about has no legs. Just they keep revising these things up simply because reality bite. Back to the U-turn by the IEA yesterday. This happened because of two reasons. Of course, the Trump administration was putting a lot of pressure on them. The Trump administration threatened that they will withdraw from the IEA if they don't change their behavior, and because they've been focusing on climate change. They did yield to Trump. So that's number one. Number two, it was the cold reality. The IEA is one of the last organizations in the world to retreat from climate goals. Everyone else, every single government, all the oil majors, all the major banks, all of them retreated, and the IEA basically was the last one to retreat yesterday. The other comment is related to the U.S. Strategic Petroleum Reserves. Yesterday, the Department of Energy announced they are buying another 1 million barrels of sour crude to add it to the SPR. Notice that it is medium sour. This is very important because we do produce massive amount of light sweet, and most of our imports are medium sour. And what is produced in the Gulf of America or the Gulf of Mexico is medium sour. Why this is important? Because we end up with hurricanes in the Gulf of Mexico. Companies might end up short on oil, and they need to borrow from the government. So it makes sense to store it in the SPR and then loan it to the oil companies at an interest, and this interest is in kind, which means that if they borrow 500,000 barrels a day, they might return it like 520,000 barrels. Sorry, not a day. 500,000 barrels, they return it 520,000 barrels. That's the interest, but it is in kind. So it makes sense to store the medium sour. The claim by the Trump administration that they want to build up the Strategic Petroleum Reserve to its maximum of 700 million does not make any sense at all. And the reason why, because some caverns have light sweet crude. And there is no reason to store light sweet crude when you are exporting 4 million barrels a day of light sweet crude to the rest of the world, when we are producing 9 million of it. why you need to store it in SPR and take the taxpayer money to store it there. So they can end up probably with an additional 100 or so, 100 million barrels. So we end up with about 500 million barrels. That's way more than enough than any crisis we might encounter in the future. So this is really not a big deal. Finally, Reuters yesterday, talking about OPEC report, they cited a statement from OPEC report that is bearish statement. And people, because it's Reuters, of course, and every trader reads that, prices went down substantially, and they attributed, Reuters itself in the story, attributed the decline in prices to the OPEC statement. Guess what? That statement does not exist. They literally made up a statement that does not exist. And my guess is the journalists basically resorted to some sort of AI, and the AI made up that statement. But the statement that's been cited by Reuters that really caused part of the decrease in prices yesterday does not exist. Back to you.
Awesome. Anas, thank you for that wrap. I appreciate it. All right, we're going to call it here, folks. It's getting late in the morning. We will catch up again tomorrow to bring a close to a phenomenal week. Thank you to all the speakers for joining. Please come back tomorrow at 8 a.m. where we will rock and roll into the weekend. Everyone have a great day, Mark.
So I'd love to see the other scenario play out as well. In that sense, I'm agnostic. And so again, I have to repeat myself, just bet on several horses and you won't be grumpy. And I can do this conference again and again and again. So let's just see what's going to happen. But I think you're right that Bitcoin has this advantage of being decentralized and therefore less prone to confiscation, intervention, whatever.
We have this huge fight between China, Russia, and the West now, but we shouldn't forget that it doesn't matter if you are in the White House in Washington or you're Putin and living in Russia, or Xi trying to manage China. They all have in common that they want to stay in control. And the guys who have the power want to stay in control. They make the laws, and they can decide whether you are allowed to invest in Bitcoin or in gold. And they all have this common theme that they want to stay in control. And what scares them most is that they lose control and people start to riot in the street and will start a revolution, because look what happened in 1917 in Russia. So governments worldwide will do everything to keep the system stable. And I'm always a bit worried what the Bitcoiners are wishing for. Sometimes I get the feeling that some of the Bitcoiners want it all to collapse and then Bitcoin can take over. But be careful what you wish for. And the guys with the power, the guys who own the guns, won't let you succeed.
That's true.
Yeah, I'm of the belief that Bitcoin Super Feature is allowing its users to natively take custody of a digital bearer asset, and that's very important for not only, I think, the future of humanity, but the future of Bitcoin and Bitcoin adoption, because it really does give, I think, power to the users, and we're seeing that decision-making kind of restored to the base level and the individual holders, as opposed to these centralized power structures. I do think, to all you guys' points, that these central authorities are threatened by sound money. So in our final minutes here, how do we feel that sound money can raise all boats? Is that tide that lifts all boats? And we'll end on a high note here.
Well, I think in the end, in order to have sound money, you really have to first convince everyone that it's in their best interest to adopt a hard standard. And unfortunately, with politicians, of course, being the worst offenders, people still think that, that money should be used in order to stimulate wealth and to. And as long as, so it starts with education, and of course an event like this helps, but I would love to see in schools across the world that there would be more focus on Austrian school economics and the benefits of sound money, because if we don't teach people the benefits of it, I think we will be stuck with elastic money, fiat money for many decades to come.
Yeah, no, I agree. I mean, not to get too political, I live in Latvia. I have my European hat on now at the European Bitcoin conference. And, we are very close to Russia. They have this war. And I think Russia is still suffering from 100 years of communism, which they started. They still haven't got over that. China is definitely a great country to trade with, but the U.S. is approaching them now with much more caution. So I think that if you look at gold versus Bitcoin, obviously it's a great safe answer to say go for both. I think that we should absolutely do. There's a lot of funds now where there are 100% you can do, that I think at an individual level it really empowers all of us, and plus it's a really great return at the moment. So without being too verbose, I guess that's enough.
Well, for private investors, it's quite clear that adding Bitcoin is very beneficial. But for me, the main theme and the main question is what governments will start to do now. Because if the Trump administration is serious on this Genius Act and is serious about introducing and backing all these stable coins, and look how they treat Tether now, and then you could have a huge shift from a sovereign like the US starting to roll out its crypto strategy, adding Bitcoin to their financial reserves. And once the US will start doing that, other countries will follow. And then the fiat system can become quite unstable, because then the flight from paper assets to hard assets has been upgraded to the sovereign level. And that's actually very scary. So I think the next 12 to 24 months will be the most exciting, but also the most dangerous one since 2008, since the Lehman crisis, because we're on the verge of a new financial crisis around sovereign bonds, around treasuries, because Japan has a huge problem on the fiscal side, UK has a huge problem, the EU has a huge problem, and US as well, and this will be the fight of our lives. What will happen in the next few years, and educate yourself, because there are lots of moving parts, and it can become very serious very, very soon.
Thank you, gentlemen.
Can you feed your cat, please?
What?
Can you feed the cat and make sure he got water too?
Welcome back to Bitcoin.
I'm not supposed to feed him every time.
I know, but he just got out of the room.
He's getting fat.
He just got out of the room, he was in there entire night.
Yeah, I know, but all night I've been letting him out.
Okay. Just make sure he's got water, because a couple times that I checked, there was no water at all.
Apple's been relative strength lately, seeing if it can hold green here.
20-point gain,
Same
LQ
exact.
covered half.
Watching Apple as well. Agree with that. I want you to break and hold specifically for 275 on Apple for a possible call entry. I'm not really overly concerned with what the rest of the market's doing. Apple hasn't necessarily.
And really, we don't necessarily see ourselves as competitors to strategy. We see ourselves as complementary, more of like, strategy's Batman and we're Robin. If you need,
Thank you
if
for
you need
being here,
people
guys.
to go
Appreciate
have
you guys.
conversations with regulators and rating agencies,
We
it's
are
much more helpful
almost
having
done with the
multiple
live.
companies pushing the same agenda,
I'll
pushing
get out of
digital
here
credit.
soon.
Ultimately,
I'm still at
our
work.
products that we offer the market have significantly different risk-return metrics. Our
Still
equity
doing
is
my
amplified
12-hour
Bitcoin,
shift, so
and our
just
digital
started
credit
like
is,
2 hours ago.
digital Bitcoin-backed
I
credit.
still got 10
So
more hours to go.
that's how we seek to differentiate, is that our products are just fundamentally different.
Henry, it's interesting to hear that because earlier you were saying
Well,
it's hard
everybody's
to be
awake
a
now,
pure
so I will
play
be
Bitcoin
ending the
play
live
in a
in
world
next 20
where
minutes.
strategy is the name that everyone
It
knows.
was
So
interesting
tell me
today.
a bit about
We
your
checked a
thoughts,
couple of things.
on that, Brent.
Very smart people came and shared good ideas with me today.
It's like, if you want to be just a straight
Couple
pure play,
books.
it's very difficult to do
Definitely
that
I'll check those
outside of
books.
strategy size, right?
Um,
And we've seen the capital markets be closed to a lot of Bitcoin treasury companies.
Yeah.
And what's funny
Like
is
always, we're still expecting the Feds to start quantitative easing, I believe, on
Strive is number one. Number one. I actually
on
reached out to
December
Matt,
1st.
a
I don't
few
know how
months
that
ago,
is going
right,
to look
when you
like.
guys,
They
had
probably
just
will not
taken out
announce
Stellar,
it
and the
as a
market didn't really
quantitative
understand what you guys
easing.
did there.
But the
And,
question
you know,
is,
you can
will
see the
they
stock
start
price, and I was
just
like, dude,
printing money
they
if
just
they
they don't get
do?
it, right? They don't get it yet. But Strive is, I think Strive is one of the models for
What can we
generation
expect?
Bitcoin companies
Also, we
that,
see
many of
President
us are trying to
Trump
follow,
issuing $2,000
internationally
checks
in how
to
we grow
what he
into
calls
that
low
more
income,
sustainable
I
size.
believe, middle or low
And George,
income
tell me a bit about
individuals
how
or
BTC, which is the
families.
parent company of Bitcoin Magazine, how does it
That is that's
the
still
network
part
and
of
how does it
the
facilitate
quantitative
these companies
easing.
in
I
their
think it's
Bitcoin
we're in
treasury
November. He's getting
ventures?
ready for that.
We launched Bitcoin
We
Corporations
check
a
in
little over a year
how
ago, in partnership with
the
Strategy.
markets we
And,
haven't
kind of similar to
gotten
what Jeff is
huge
saying
updates
is that, they
since
wanna
the
see
government
more,
was in
companies
shutdown
follow
for
in
the
footsteps,
past
more companies adopt
40
the
days,
playbook that they've,
which
kind of been
technically
championing. So,
ended, but it took 40
the way
days
that the way that
to
Bitcoin
end
Corporations
that. I
works
think
is
it
that
was
we are on a
intentional,
mission to accelerate
just to
corporate
suppress
Bitcoin adoption
any
by
good news that's
highlighting
coming
the
out of the
companies that are
markets
doing this great
and
work, resourcing
continue
them,
the narrative
creating
because
environments where
President
they can
Trump
meet each other,
really
different
wants
vendors in the
the
space.
rate cuts to
We put on a
continue,
symposium last night
and
to,
any positive
for members
outcome
and
of
others in the space.
to that,
And so, yeah, I
from
mean,
the
the
market
goal
or
really
out
is
of the
to just continue
market
to
would
platform these
would
companies and
completely
make
stop
them
that.
known, equip them, resource
So
them, and
no
and
news is a
connect
good
with each other.
news
Do you see a
for the
world in the
markets
future where
because
every company is going to be some sort of Bitcoin treasury company?
I mean, absolutely. I think that we are
yeah.
definitely on our way. I think
The markets need a reason to go down, and that reason was government shutdown.
on its balance sheet in some way, shape, or form.
Majorly, the markets were going down, especially the crypto markets. The other markets were still in a bull run. So we don't see that stopping anytime soon, which is normal. Everybody expects that to go. Plus, the crypto market needs liquidity. So liquidity is right now really tight. Really tight. Until December 1st. Will that change anything? Will more rate cuts and the government getting out of the quantitative tightening, is that going to create more liquidity in the market? If so, then we can expect these assets to even do a little better than they do. What I'm really concerned is when the data starts flowing and coming out. If it's, we don't see any major issue to be scared of, honestly. It's, yeah, the market's slow, but also we're expecting over $1 trillion spending in these holidays. Everybody's buying it, so we don't see that slowing. I have not seen any indication that even indicates that last year buying and consumer spending was even stronger than, I think this would be even more stronger than last year consumer spending, which February comes to January 1st, quarter one of next year. I'm scared. I'm gonna say that we may go down really big because hey,
mean, even going back like 2 years
the
ago,
markets are doing well.
after the last bear market, it was really hard for miners to
There's
get
no
access
reason to
financing
continue
to
quantitative
fund the
easing.
growth. Right now,
Also, it's gonna be
you know,
a
in terms
mid-year
of funding
term
growth,
or
either mining or
primaries,
HPC, there's a lot
and
more
every
access to capital.
primary is a
For us, like
downturn
what
for the
we've seen is
markets,
just,
is a bear market.
just a massive explosion of options for miners to
So
get that access and the
we'll
growth
see
that
how
comes
that
with it.
plays. This has been one of the craziest year that we have seen so far when it comes to the risky assets like Bitcoin. I mean, it performed really well. Don't get me wrong. 2 years ago, if you knew Bitcoin was $16,000, and now we're talking about over 100. Like it closed 188 days, I think, above 100,000. Is it 188 days or something similar? So it's not small. Let me see. Let me just verify that.
On the energy loans, we offer also electricity energy loans. Basically, those are very sticky because energy prices also going up, and a lot of miners continue to pile up on that product. For the larger miners, as Matt mentioned, they have more options, also more capital market options. Some of them are public, some of them are to be public. They have more access to capital. So it really depends on the tier and the location. But we see a lot of them focus basically on paying their loans and scaling, basically getting loans for new facilities and better hardware and such.
I would add that the cost of capital has come down.
Also, not to mention that we're still standing 100 and what? Let me check. 100 and less than $102,000, and it's day one of Bitcoin conference and in Amsterdam, which is the whatever you're hearing right now. It's insane. Every Bitcoin conference, we've seen crazy numbers going up, like literally 5, 6, 7% Bitcoin going up. And a few days after the conference, we've seen crashes. The latest one, I think, was Singapore. Was it Singapore one? And was it Singapore? Is that place even Singapore? I don't even know that place's name. But anyways, when they did that, I think it was whatever token something 7. I don't know. When that finished, we've seen really good retrace on Bitcoin numbers. I think that was when we went to 124 first time, and then we retraced, and ever since, I mean, we peaked one more time above 125,000, but we came down, which is. Come on, Guac, why is it taking for you? But it's been really a lot of so many days above 100,000. So that is yeah. People wanna have 200,000 Bitcoin, but hey, in 2 years from 15, 16,000 to 100 of 125,000. If you are early buyer, you should be good. You shouldn't be even worrying about what Bitcoin is doing. Just hold it and because you up like no any other asset will give you that. Like investing 2020 to end of mid 2022, if you invested $16,000 on one Bitcoin, now you're above 100,000. So this shouldn't be a reason why you complain. But if you bought at 126, obviously, but you need to understand is you get what you paid for. You know, nobody ever said to you that don't invest in Bitcoin 2022. Nobody said you can't buy it in 2023. Nobody told you you couldn't buy it in 2019 when this thing was under $10,000, bouncing back and forth there. So no complaints here. You get what you paid for. So it could literally be another year, and we could be between 80,000 to 100,000, and that would be fine.
Now they want to have access to it to do maybe other things or buy real estate in Miami or something else. But this is what we are seeing.
Yeah, I would. You mentioned you're seeing a lot of this in the big.
Yeah, Brian. Yeah, I try. Not so much, but I mean, it's that I can't buy gold, and even if I buy gold, I can't carry the gold with me. So the only thing I can buy is Bitcoin, and it's not heavy enough. You can keep it in your phone and go do. You know.
They're just sitting on the Bitcoin anyway. play. So they're the
Don't
hot
even talk to
strategy,
anyone.
many
Don't show
times like
anybody.
Bitcoin's
Don't
idle,
say you have
they don't
it
mind
for the next 10 years, and you
So I
would
think, to answer your question, I think you're seeing a lot of the
at least 10 years we starting have $500,000
And one more area
if
to
we don't
add,
do anything.
miners now are more strategic and they are
So
looking more for longer term
that would be
loans
all. Nine. Oh, I gotta go. So love you guys so
also
much and have a
treasury
wonderful,
companies as such. They
amazing
are
day.
looking for
I'll probably
structures
see you
where
guys
it's
tomorrow.
usually beyond 1
Take
year,
care, guys.
has competitive rate and structured in a way that is aligned with their business. And this is